Hello and welcome to another Smaulgld live stream. It is November 3rd, 2019. It is Sunday, so it is Solid Gold Sunday with Smaulgld. We're going to talk about gold today, and specifically tonight's topic is gold's open interest soars to another record. We're going to take a look at some charts on gold open interest. We're going to take a look at the price of gold in Indian rupees. We're going to look at the Dow Gold ratio. We're going to take a look also at the Comex warehouses, the ETFs, and we're also going to take a quick look at platinum and palladium. So let's get started on tonight's topic on gold's open interest soaring to another record. First, we need to discuss what open interest is on the Comex. That's all the contracts that are outstanding in the different positions that people or institutions may have. It's distinguished from volume, which is the actual trading volume amongst the contracts. So if you have open interest, it means that there is, as the word says, a lot of interest in gold, and the gold open interest, I'll show you a chart in a second, is at an all-time high. Now, that is a very bullish sign, I believe, because if there's a lot of interest in gold and the price is rising, it means that there's an interest in gold, and the interest in gold is going higher. Let's take a look at those charts on gold open interest, and I'll show you what I'm talking about. Here we go. All right, so here's the first chart here. You can see the open interest rising, which is the second. It's the segment in the center, open interest. It's the green. Above the first segment on the top is the blue line, which is the price of gold. And look at how the open interest increases with the price of gold. That's a very bullish sign, at least how I look at this. And you can see the open interest is pretty much up 60-70% since the summer. And then that's when the gold price rose. You can see that movement from about $12.75 all the way up to $1,500, and it's hung out there. Now, the volume has dipped a bit, but the volume was pretty robust. At the beginning of the move, the volumes come down a bit, but that's just the actively traded contracts. The open interest eventually should lead to an increase in volume because those contracts at some point are going to have to either expire by the terms, be rolled over, or cashed out. So you could see the open interest very strong. That's a lot of interest in gold. And let's just take a look at what's happened with the Comex gold warehouse. Now, owners per ounce, let's just first take a look at the stockpile. There's been some interesting things going on, and then we'll look at the owners per ounce. Okay, so there's 9.13 million ounces of gold in the Comex warehouse. It's a decent amount, but it's not an incredible amount. But the interesting thing was the amount of gold that gold that is registered is still pretty small. It's only like 1.15 million ounces. But if you could look very closely in 2019 to the far right, you can see where there was only like 200, 300,000 of those registered gold bars ready to sell. Now, they're in the form ready to trade on Comex, but they were not registered for sale. We've seen a big increase in the amount of gold that's now available, not just eligible, but is registered to sell. When I say a big increase, I mean from the tiny amount that was there. But still, there's a decent chunk of gold in the Comex warehouse. But let's take a look at how that translates to what we call owners per ounce. And what I mean is it's the amount of gold available in the Comex warehouse to satisfy the contracts, the amount of contracts that are there. So here is the owners per ounce of all, and it's not really owners per ounce because they don't own that gold, but we'll use that term because that's what Nick Laird uses, the producer of this chart. If you look at this chart, and I'll take you through it, right at the top bar or the top segment is the price of gold, and you can see that's about $1,511 most recently. But then you see that open interest is the second chart, or the second segment of the chart, and there's where you can see it's up to 68 million ounces. That means that the contracts reflecting or representing 68 million ounces are open. There's interest in 68 million ounces of gold, but the amount of gold, million of ounces that are in those warehouses is only 9 million. And you can see that if you take that owners per ounce, it's rising, meaning that the amount of gold relative to the amount of contracts is decreasing, because you're getting more and more contracts opening up, and you're not really getting any big increase in the amount of gold available to settle those contracts. So the owners per ounce now is at 7.457, and that's higher than it's been. This is the overall amount of gold, not the registered amount. So that's a very high number. You can see back in 2017, the number was about 3.5, which wasn't really a big deal, because the volume was lower and there was more gold in the Comex warehouses than there is today. But let's look at it as registered owners per ounce. Now, the registered owners per ounce number has been crazy the last, I'd say since 2016, and then it went uncrazy between 2017 and 18, and then I got crazy again. What I mean by crazy is there was very little of that big bulk of gold in the Comex warehouse that was registered. So at one point in 2016, because there was so little gold in the warehouse, there was like an owners per ounce of about 510 to 1. Right now that number is dropping, only because, not because there's more gold in the Comex warehouse, because they've registered more of the available gold, but it's still a pretty high 59.23, and you can see at the beginning of the year it was over 400. So just keep that in mind, that open interest is increasing. The registered amounts are also increasing, but that's really irrelevant. It's really, I think, the total amount of gold in the warehouse, the eligible amount along with the registered, the full amount is really what's available to settle contracts. Whether it's registered or not isn't that important. It's more of a technicality. If there is a need to deliver gold and the price is right, the reason that traders have gold in eligible form in the Comex is so that it can be registered and sold if necessary. So I don't really put much stock into the owners per ounce in the gold trade. I'd like to go back now to the owners per ounce for the overall, and that's where it's a little troubling, because the open interest is exploding, but the total amounts of gold in the warehouses is actually not rising hardly at all. Now, they may be registering more of what's available, but that doesn't really show you the issue that's happening here. And it's not, I don't think it's an issue in terms of the Comex is going to default. What it does show, though, is that there's far more interest in gold contracts than there is in participants actually loading up the vaults with the physical gold. At some point, it does get a little dicey, because there will be delivery issues. There will be certain traders that will want delivery. And as you can see, this is the number I like to focus on, the owners per ounce of the total amount of gold. That's very high. You can see that's 7.5, and that's as high as it's been in over 10 years. And that's a main function, not that there's less gold in the Comex vaults, but that the open interest is exploding and is at an all-time high. So keep that in mind. I think it's a very important point that the gold price has been rising steadily for the last 6 months, and the interest in gold is rising. And not only is it true on the Comex, it's also true at the ETF. Here's the ETF. You could see the same thing. The gold flowing into those investment vehicles is almost now at an all-time high, pretty close to the all-time high in 2012, 2013, as you can see on that chart. GLD, and the other gold ETFs are really adding a lot. I mean, there's a big increase you can see in the middle of 2019 corresponding with the increase in price. So lots of interest in gold. The only place where there is less interest in gold appears to be at the Perth and US mints, where, well, the Perth mint's doing pretty well. They're not selling all-time amounts, and the US mint is having one of its worst years since 2007 in terms of sales. So tremendous interest in gold ETFs and tremendous interest in gold trading on the Comex. Now let's just quickly look over at platinum and palladium, because introduced you or talked about the owners per ounce concept. Let's look at this. Is crazy. Look at the palladium amount, just the total amount of palladium that's stockpiled in warehouses available for delivery on palladium contracts. There's 52,000 ounces of palladium. That's it. They're trading around a small pile of palladium. And what about the open interest in palladium? What does that look like in terms of owners per ounce? Wow, 54. We thought that 7-8 to 1 ratio was high. It's 54. At one point in 2018, it was 100 to 1. So the amount of palladium that's in the Comex, or they're called NYMEX, it's the same company, but the CME group that owns this thing. But lots of contracts, not at an all-time high, but still, the open interest, as you can see, is about, looks like almost 3 million ounces, and there's only 52,000 ounces worth of palladium they're trading around. The all-time high looks like of palladium trading open interest was around 2015, and then we had a peak in 2018. You can see in the second box down. So open interest clearly does presage price moves. You can see the big price move in palladium after it peaked in open interest in 2018. You can see the big run up from the middle of 2018 in the top box, going all the way up now to 1784, which is higher than the price of gold, which is at 1511. Let's look at platinum. Same thing. Not much platinum, but a little bit more in the NYMEX warehouse. 1.64 million ounces of platinum. A decent chunk of platinum, but not that much. The platinum ETF, I think, has 3.6 million ounces. But let's look at platinum owners per ounce. We saw gold was 7 to 1, 7.5 to 1, and palladium was like 58 to 1. Platinum, with its open interest, is 27 to 1. So platinum and palladium are definitely much more thinly traded markets than gold. And there's very little platinum and even fewer ounces of palladium at the NYMEX warehouses to satisfy those trades. Silver, people get all excited about silver. Silver, it's the lowest ratio at all. It's only 3.5, as you can see on that chart. Open interest, and you can see the amount of silver in the Comex vault exploding from about 150 million ounces in 2016 and 17 all the way to 314 million ounces today. And the open interest is also very strong, but actually the amount of silver that's flown into those Comex warehouses is higher than the amount of open interest. And you can see the owners per ounce dropping from about 7-8 to 1 in 2016 all the way down now to about 3.5 to 1. Not because there's less interest in silver. There's decent open interest, but it's still muddling along at the same levels since 2017, whereas the amount of silver in the Comex warehouses has pretty much doubled. All right, I think that's it on the Comex. But important takeaway there is that gold open interest is very high. Now let's take a look at, last night we took a look at these charts. We're going to take a look at them again. We looked at how many ounces of silver it takes to buy a house, and then we looked at the timings of when you buy precious metals and how it impacts your investment. But let's look at how many ounces of, I don't have it tonight, I apologize. I only have how many ounces of silver it takes to buy a single family home. No, never mind. I do have it. This is the gold one. I labeled it incorrectly. Last night we looked at how many ounces of silver it took to buy a single family home. It's like 22,000 ounces of silver. Mike Baloney was saying in 2012 that by 2015 you should be able to buy a single family home with 500 ounces, maybe even 200 ounces of silver. Not even close. But gold, you can see in 2011, it only took 150 ounces to buy a single family home. And right now it only takes about 250 ounces of gold to buy a single family home. Back in the 2000s when housing markets was going up, were going up, the housing market was going up, and gold was pretty much in the few $100s an ounce. It took 800 ounces of gold to buy a single family home. So gold certainly has been a solid performer, as we're going to see now if you look at these the coming charts. We're not going to spend as much time on them tonight. If you want a full view of these charts, you can go to smaulgld.com. They're all posted on the Smaulgld website under the silver article, and there's videos with that particular. Let me tell you the name of the blog post to look for if you're not listening to this. If you're listening to it the day that we make this podcast, obviously you just go to smaulgld.com and you'll see it. But there's going to be people who listen to this video weeks from now, months from now, years from now, and they won't be able to find it because it'll no longer be on the homepage. I'm going to give you the exact name of the article to look for if you want to check out these charts that we're going to briefly go through. They were covered in depth last night. So what you want to do is go to smaulgld.com or BitShooter YouTube and look for how timing your silver purchases can dramatically impact your return, and you'll see all the charts that we're quickly going to go through, and also there's video that goes with them. So we're not going to spend a lot of time on these right now, but here's the first one I wanted to show. And this one is basically, look, if you bought silver or gold in 2000, the very beginning of the year, or palladium, you're up, and you're up the most with gold, 424%. Second most, palladium, 302%. Even platinum, you're up 112%, and silver, you're up 235%. But it really changes, and gold is the only gold. Palladium has outperformed everything, but gold has been a solid performer. We're just going to look at another chart, let's say since 2011, and you could see there, even though you're looking at, if you bought in January 2011, you were pretty much buying almost at the peak of gold, the peak of silver. These were the periods of time when they were headed towards their all-time high. But even so, if you bought gold on January 1st, 2011, you paid $1,400 for it. Well, today it's $1,511, so you're up 7-8%. Even then, if you bought in 2011, you're still up 7%. Whereas with silver, you would have paid $30 an ounce, and now you're at 18. You're down 41%. Same with platinum. You would have paid $17.31. Now you're at $9.35. You're down 46%, even worse than silver. But had you bought palladium, which how many people did, at $7.91, it's now at $18.01, you would have made 127%. Anyway, there are other charts from 2008, 9, 10, 11, 17, 16, and 2018, and you can compare them. Very nice charts prepared by Nick Laird, but we're not going to go through them all tonight. But as I said, they were covered last night, and they're on that on smaulgld.com, where you can look at them at your leisure. You don't have to wait for me to get to the next chart. They're all up on smaulgld.com. All right, and finally, let's take a look before we get to your comments. The Dow Gold ratio. The Dow Gold ratio is at 18 right now, and here's a chart showing that. And the reason it's not lower, even though the gold price is rising, is the Dow is rising too. And we did see just on Friday, the non-farm payroll number was 160. They were expecting 160,000. They were expecting 86,000. And then with giving effect to, if you took out the GM stuff, because there were big strikes at GM, that's why they thought the number was going to be lower. They said the job number adjusted would have been 330,000. So the stock market went higher, and gold and silver actually went higher too, which was surprising because a good jobs number generally means that the Fed believes that it doesn't need to it doesn't need to cut rates anymore, and cutting rates is generally what helps gold and silver, because if you have lower interest rates, then gold and silver become more attractive, especially since lowering rates generally means while the United States Treasuries may pay a rate of interest, we're in negative interest territory for a lot of bonds, a lot of sovereign debt. There's the Dow versus gold ratio. And a lot of people think that when the Dow ratio gets into single digits, that's when you start to think about, well, maybe the Dow is undervalued and gold is overvalued. And that's when some people think that that's a time to swap your gold for the Dow. Maybe not all of it, because some people like to hold on to some gold for insurance. But if you're trading, and I'm not giving a recommendation here, but obviously the lower the ratio is, the more likely that gold is doing very, very well and that the stocks are heading in the toilet. And that may be a time that things are going to start to turn around. That's just one bit of trading wisdom, not mine, but that I've read that people do. I don't trade the Dow and the gold, but nor do I trade the gold-silver ratio either. And that one I don't think is relevant, but we've discussed that in the past many times. But I do think the Dow gold ratio is far more relevant as a trading tool. And I think the last thing we want to take a look at is gold and the Indian rupee. Now, last night we talked about silver versus the Indian rupee, and we saw that silver is getting a little pricey now in India as well. Remember, silver was the direct beneficiary of the rise in price of gold because Indians slammed the brakes on, stopped importing gold, stopped buying gold, even though it was festival season. When I say stop buying, slowed their purchases in the aggregate, and we're moving a bit to silver. But now silver is getting expensive, and as we saw last night, but gold is starting to pull back a little bit in Indian rupee. That's less a function of the price of gold and more a function of the Indian rupee perhaps strengthening just a bit, as you can see on that chart. All right, let's see what we got in the comments tonight. The Smaulgld Mug stackers, game changers, and the like. Remember, if you've enjoyed this presentation, I am on the hunt for more patrons and Subscribe Star members and donations because October was a very slow month. I think we gained one or two, and this is time consuming for me, and I got to make it worth my while to get up and do this. But if you did enjoy it, please consider making a donation or one-time or recurring through Patreon, PayPal, or Subscribe Star, or Bitcoin, or Litecoin, and you can do that if you're interested in donating via Bitcoin or Litecoin. You can do it by holding your phone up to the QR codes that are on the screen. They're also on the Smaulgld website below this BitChute. The QR codes aren't below the BitChute and YouTube, but the Bitcoin and Litecoin addresses are. And of course, if you want to donate via Patreon and become a Smaulgld patron or Subscribe Star member, the links are staring you in the face on the screen, and they're also below the BitChute, YouTube, and on the Smaulgld website. And you can also get yourself a Smaulgld mug or any other Smaulgld merchandise. Links again on the Smaulgld website or below the BitChute and YouTube. Or you can send a Smaulgld gift via check, cash, or items of value. I mentioned the other day I don't like to call Smaulgld a very nice gift of amber and a postal money order. Look at this. If you haven't seen this, this was very nice. Look at that. That's a very thoughtful gift by Fiona. Some amber, some butterscotch amber, a personal note, and a $30 money order there. So very, very nice indeed, and very much appreciated when we get those types of things. And also, if you are going to buy things like precious metals, wine, or coffee, or storable food, there are Smaulgld affiliate links. And the way affiliate links work is if you click on them, you go to those websites like SD Bullion, Money Metals Exchange, Kona Coffee, and the like, and if you buy something after you've clicked on those links, then Smaulgld gets a small commission. And that's another way of helping the site out with really you not having to do anything other than buy what you probably would normally be buying if you were to shop at those sites. Also, if you've never shopped at those sites, please check them out because you might find that you'd like to shop at those sites. And if you do, Smaulgld gets a small commission. So again, thank you very much to all the Smaulgld patrons and Subscribe Star members and those who donate via PayPal or those who've sent me gifts. I'm very thankful for all of that. So now I want to see what you all are saying. If you're interested, maybe Bernie was complaining last night. He did not want to do it. He thought he wasn't being paid a minimum wage. He didn't even want to do the countdown. So we may have to do some fundraising for Bernie or Mario because they're kind of upset. They want to get paid, as does Smaulgld. All right, let's see who is in the comments section tonight and see what they want. All right. Christian Borgstrom is here. Hello, Christian. Ken Singsta says, mugging for life. Yes, indeed. Philip Quinn says, howdy all. DB Stupid says, wow, 15 watching in the first 3 minutes. Well, that's generally about all we get. We get about 30 a night, and the beginning is about 15. So today's no bigger, no lower than most nights. Philip Quinn is a registered owner of Smaulgld Mugs. Yes, indeed. And Philip is a Smaulgld patron. Very thankful for Philip's contributions to the Smaulgld website. DB stupid. Philip Quinn, I think 1,600 by year end is reasonable. Well, that's what I said at the beginning of the year. If you remember, I've been saying all year, gold go from 1275 to 13, 14, 15. It's hung out at those levels and then went higher. And my ultimate prediction was gold get to 1,600, then silver gets to 20 to 22 by the end of the year. We'll see what happens. But you guys are thinking that Tom Manley is here. Haven't seen Tom in a while. I'm surprised the last two rate cuts haven't pushed us over 15-year terms, says DB Stupid. You know why? I think this trading nonsense is a lot of the gold trade. It's not really, I don't think it's relevant, but you got to look out for it, is a Chinese deal. Somehow they think a Chinese deal solves everything. I think it's going to be a buy on the rumor, trade on the fact, or no, trade on the rumor, sell on the fact. If there actually is anytime, okay, here's what it is. Anytime you get any news that there might be a Chinese deal with the United States, then gold takes a hit, the stock market goes higher. And then when they say, oh, there might not be a Chinese deal, then gold goes higher and the stock market goes lower. Whatever deal they come up with isn't going to solve the issue of why gold is rising. Gold isn't rising because there is no Chinese deal, and there won't be one. Gold is rising because of negative interest rates, because of profligacy of governments, because of the repo, because of the $60 billion in US QE, because of Mario Draghi saying, maybe we do the monetary policy, and maybe we do a helicopter drop. I mean, this is the kind of stuff that's driving the gold price higher. Negative interest rates, Mario Draghi saying that the negative interest rates could only do so much. Then you got Christine Lagarde coming in. You've got the Bank of Japan buying all the ETFs. That's why gold is rising. It's got nothing to do with China. And the other reason gold is rising is not rising more is because of the dollar. Because of all this debt. And then people, I guess, don't quite process this when they keep talking about dollar collapse. Yes, the U.S. is in great amount of debt, but the thing is the dollar is in great demand around the world because of the debt. The more debt you issue, and you issue it in dollars, the more dollars are needed to satisfy the debt. So the dollar remains in demand. That's worth repeating. Yes, there's a lot of debt. If it was only the United States issuing debt, its own debt, that's a problem. So, for example, if Argentina issues a lot of debt, but they issue it in U.S. dollars, they're in a world of hurt because they got to come up with the dollars. And where are they going to come up with the dollars? By trading in crappy Argentine pesos. That's what the world is doing. Most of the world, even China. China owes trillions in dollars. They need dollars. And so that's why gold isn't going higher in dollar prices, but it really is. It's at all-time highs in Australian dollars, Canadian dollars, many other, almost every currency. So that's another reason why gold is kind of being held back. It's only because of the strength of the dollar. All right, what else do we got here? Philip Quinn, mate, says, money printing by the Fed equals devaluation of fiat. That is true. Modern monetary policy, helicopter money in the future, gold price will rise. Yeah, it's a short-term trading stuff. It is headed higher. Has been heading higher. It's broken through that 1275 trading technical level, and it's just been stair-stepping higher. Can't expect it to go straight up. It is a pretty large market. Philip Quinn, has anyone heard about China coming out with gold-backed crypto? See, that's another one. I let me see if hold on. I was going to save it, but I'll show you what I have here. Max Kaiser was promoting that, and it's ridiculous. This is, let me show you what I tweeted out today about that gold-backed crypto. Here we go. Well, first of all, there's a 2-for-1 pump. Gold-backed yuan cryptocurrency. Here it is. China is making its big move. It's secretly hoarding gold and is ready to destroy the U.S. dollar with a new crypto-backed gold. Yeah, China to crush the dollar. Sun Tzu, game changer. Complete nonsense. This is a Bitcoin and gold pump all at once. Then I tweeted out it later. I don't have the screenshot of it. I tweeted out later that it's wrong. It's a silver-backed yuan. Sun Tzu. I mean, Max Kai, and they're going to crash JP Morgan. Max is the one who is going on about crash JP Morgan, buy silver, then Bitcoin. Now he's got gold and Bitcoin in the pump. A cryptocurrency by China has got nothing to do with anything. If you want to take your currency and slap it on a blockchain, it's not going to change the value of the crypto. Similarly, gold money, you can trade gold. Okay, so you can buy gold, store it with gold money, whether it's on a blockchain or not, and now you can spend it. That doesn't make gold more valuable. It's a feature. It makes gold money more valuable because you're willing to store your gold with them because you can spend the gold. But the gold itself isn't more valuable just because it's tossed on a blockchain. So if China puts its currency on a blockchain, it's not going to make it game over and game changer. It's still the same crap you want. Now, this nonsense, they're going to back it with gold. What does that even mean? Does that mean they're going to be able to redeem? No way. They're not going to redeem the yuan for gold. They might as well just put the gold on the blockchain and tell people to come and get it. That's not happening either. Anyway, so these are stories that come and go and everybody believes them. Remember, inverted yield curve, it means recession coming, and we just had a blowout number on the employment numbers. Now, a lot of people say, well, those numbers are fake. Those numbers are fake. Well, okay, all right, they're fake, but they're consistently fake. The point being is the way they gauge a recession. When they were saying a recession is coming, if you believe the numbers are fake, a lot of people do, they think we already are in a recession. But you got to go with, here it is, inverted yield curve. Inverted yield curve. Yeah. U.S. hiring resilient with 128,000 gain. What I was saying about the people who say the numbers are fake, yeah, but they're consistently fake. So a year ago, when everybody was saying inverted yield curve, run to the hills, it means a recession is coming in a year. It always means that. Well, didn't happen. And if you say, well, the numbers are fake, well, they were fake a year ago. So you're going off the fake year ago numbers. The way they measure a recession hasn't happened. You could say we're in a recession, we've been in a recession for 10 years, doesn't matter. What they mean is that if the GDP goes below zero and is negative, that's a recession for 2 quarters. Hasn't done that, despite this inverted yield curve. It's the same with the repo madness. There's always a story. Gold, back yuan, Comex default, all these reasons why you should click here and buy this subscription or whatever. Anyway, I just sell mugs and ask for money and try to give you some type of objectivity in what's going on here. Now, let's get back to the matter at hand. Hold on here. Let me get back. Let's see what other comments we may have. Philip Quinn, we already did that one. Christian Borgström from Sverige. Doesn't the gold price usually fall late in the year and rise in the beginning of a new year? Yes, that is traditionally what is happening. Yeah. There is a historic, it doesn't always happen, but it does. It usually falls late in the year and rises at the beginning of the year, but you can never count on that. There's some type of seasonality. Let me see if while we're here, if I can multitask and find. I do have a chart on that. It's kind of uncanny, but there was one year where it didn't work at all. But you could do the old buy in January, sell in May, and go away, and it'll work. No, I'm not going to be able to find it if I'm going to go through the comments. But it's a good point, Christian. All right. Most transactions are already digital. No need for crypto other than making it easier to track. Yeah, I don't understand the whole... To me, it's pretty obvious. A decentralized blockchain has some advantages over regular digital or a centralized blockchain, only if you don't want a centralized authority to be able to shut it down. The only advantage to a decentralized blockchain, or it's a big advantage, is that it's not run or controlled by anyone. The idea of a blockchain, though, is just a ledger, and it registers everything and you can see it. But on a centralized blockchain, it's the same thing, except the company or the entity or the person or the country running it can block transactions. They can find transactions and know exactly who conducted them and then go after them. Whereas in a decentralized one, it's you can track people in some respects unless you do something else to the blockchain to make the transactions anonymous. But there's nobody that can kick you off of Bitcoin or a decentralized blockchain. There's nobody who can block a transaction. Whereas on a centralized blockchain or any digital system, they can reverse payments. They can block you out of the system. So I don't understand what the idea is that you're going to be on the blockchain. As you're saying, mate, is that blockchain, digital, is just a different type of blockchain. Is no real centralized blockchain is no different than what we already have, really, other than it's a blockchain as opposed to whatever they're using now. Okay, Philip Quinn says DB, China does have a lot of gold. So what? So does India. So do a lot of countries. Game changer gold, probably a rumor. It's not a rumor. See, these people make this stuff up. They make it up and then say, oh, sources. It's just like the mainstream media. Sources say. Yeah, sources say. The source that you asked to tell you something so that you could say sources say. The whole gold back yuan want thing I called as a bluff back in 2017. They were all touting it. They were all saying as if it was true. Didn't happen. They were saying it was going to happen by the end of the year. It didn't happen in 2017. Then you don't hear about it again. A lot of the stories, if you think Comex default, they're evergreen stories. They come out with some BS. Everyone gets all excited. Then when they forget about it, they realize, oh, 3 years later, we can bring it up again. Gold back yuan, game changer. Everybody's forgotten about it. So now it's back on the table. Comex default comes out every 2 or 3 years. Shemitah comes every 7 years. A lot of you people fall for this stuff. And then you repeat it. And it's just like the mainstream media. They count on you repeating this nonsense. And you get views. If I had put out a video tonight, I wouldn't have 20, 30 people. I had 110 if I put China to launch gold back yuan, game changer. All right. What else do we have here? Let's see. House to gold ratio is nice. It's a shame gold has risen dramatically. Wages have not. Fiona is here. Hello, Fiona. Haven't seen you in a while. Job number equals BLS fantasy. BS admitted 500 jobs lowered over the last year. It's a made-up number. Of course it is. But again, all the numbers are made up. Or you can't. See, you can do whatever you want. But when you look at these numbers, what a lot of people do is they believe the ones they want to believe, and then they call everything else that they don't want to believe made up. Well, it's possible. If they're making up all of them, then they're making them all. It's easier to make them all up consistently. So my point is that, for example, people want to believe there's no gold at Fort Knox and China has zillions of tons of gold and therefore it's game over. Well, if it was that important to have gold, the United States would have it. They wouldn't tell you. But when China doesn't tell you, it's some kind of Sun Tzu deception and they're ready to crush the dollar. Well, if they've been ready to crush the dollar, how come they haven't done it already? This is a bunch of nonsense that just keeps you pumped up for the next thing, gets you to listen, and people, there are people who have just decided they hate the United States and they love China now. Okay. So you start to believe stuff that you want to believe about China, and you start to believe stuff you want to believe about the United States, and then you get into the whole you can't prove it's not true. Okay, well, go listen to Pumpers then. Eli, printed the money. Yes, truth. Debt is a worldwide web issue. It's a world issue. The idea that the United States is the sole purveyor of debt is nuts. Every country is on a fiat standard. They're on a dollar standard, many of them, most of them. And that's what the problem is. It's not just the United States, except the United States actually benefits from all that debt. Whereas all the other countries, they don't benefit from owing all that money. They got to go find the dollars. And what can they do? If they can print the money to buy the dollars, then they're going to print the money, which makes their currency worth less in relation to the dollar because they have to print the money to buy the dollars to pay off the debt. All right. You should hook up the live so we can donate straight from the live by clicking on the button from within the live. Maneko does that. Trey Snow says, yeah, I don't have what's that stupid thing? YouTube, whatever it is, the monetization. Because then you got to sit and watch ads as they go by, and then you got to complain when they're demonetizing you, and I don't want to deal with that. And also, YouTube takes a cut of that money. And then I've heard, if they don't like what you say, they'll withhold that money. I prefer what Fiona did, direct deposit. She sat down and wrote me a very nice letter and sent me something. Or you can send Bitcoin or Litecoin, or you can send nothing. But to run through YouTube and give them more money and then have them demonetize you, deboost you, I'd rather not have the money. But thank you for the thought there, Trace. Now, if you really want to send something, maybe it's a little extra effort. You go to Patreon, you go to PayPal, you go to Subscribestar, you write a letter. The only way I get the full amount of the money is when you send Bitcoin or Litecoin, or you actually physically send a check or cash. Otherwise, all these places take money. I know it's convenient, so if that's how people want to do it, but I don't want to add one more convenience and have another handout from YouTube on a super chat where they take, I don't know, 6-7%. And when people send you $5 through PayPal, I get $4.18. So they're making $1 out of it almost. It's anyway. I know, make it easy to donate, Lewis. My wife. I know it doesn't let you go to Patreon because it says there's Women of the Night there, but still, I appreciate the people on Patreon and Subscribestar and PayPal, but they're taking a big cut. And the other thing is, with Subscribestar, I have 5 Subscribestar members, and you have to have 5 in order to get your money out, active subscribers, and I only have 5. Someone was kind enough to put themselves on the line there for that one. And then you have to have $150 before they let you take the money out. Now think about that. If you just send the money, then I get the money, then they take a fee, and then when it goes, then they send it to PayPal, and when they send it to PayPal, PayPal takes a cut and sends it to me. So if I'm supposed to get $150 in donations, I end up getting $138. And I have to wait because I don't have that many Subscribestar members. It took 4 months to get the $138. So when you average that over per month, I am working pretty much. Actually, it's costing me money, but that's a different story. So just so you understand the economics, so I don't want to open up another avenue to make it so easy for people to send YouTube money, basically is what it is. And then for them to tell me I can't have it because I said I'm imitating Mario Draghi and that offends somebody. I want to imitate Bernie Sanders and I want to imitate Mario Draghi. I don't want YouTube stepping on it and telling me I can't do it. So, Bernie, what do you think? Well, the damn thing is that the 1% got all the money and you're trying to become one of the 1%. So I think you should be taxed and I think they should close this damn channel down. Bernie, well, relax yourself. No, I'm not going to relax because you have denied me a living wage on this channel. I've been doing the countdown for years now and you have shown no gratitude. And now it's time for me to form a union and make sure that you either pay us a living wage or we tax the hell out of you because your damn channel is part of the 1% and I don't like it one bit. Bernie, I can get rid of this whole thing. If they don't want to send money, I can't pay you. So what do you want me to do? Well, then they should be forced to pay. A lot of people on your channel probably have a lot of wealth, and that wealth can be taxed and sent here so that you can pay me. All right, Bernie, but I don't have that power. Well, when I become president, that's the first thing I'm going to do. All right, Bernie, I'm still not voting for you, but you can do that. Can you do the countdown for us? No, I'm not going to do the countdown unless I get paid. All right. Well, then don't do the countdown. I'm not paying you. All right, everyone. Have a good night, and we will see you soon. Thank you very much.